Hello and welcome to the day ahead. It is Tuesday, November the 15th. I'm Andrew Gagan. There have been modest falls on Wall Street overnight as investors digest comments from Fed officials on future policy direction. Real estate and financial shares fell. Materials and the defensive healthcare sector led the gains on the S&P 500. And shares of Biogen and Eli Lilly rose after Swiss rival Roche revealed its Alzheimer's disease drug candidate had failed. Amazon shares fell on reports it's planning to lay off around 10,000 employees, which would represent about 3% of its corporate workforce. Shares in Tyson Foods were lower after the food processor said weakening demand for pork and beef led to lower than expected quarterly earnings. And later this week, the impact of rising costs on consumer spending will be clearer in the States when the big retailers, Walmart and Target, reveal their results. Well, the International Monetary Fund's outlook for global economy has deteriorated. It blames tightening monetary policy, which has been triggered by broad-based inflation, weaker growth in China, and ongoing supply disruptions and food insecurity caused by Russia's invasion of Ukraine. The forecast was prepared for the G20 Leaders Summit in Indonesia. It cites weakness in the most recent gauge of manufacturing and services activity among the G20 economies. Readings for a growing share of G20 countries have fallen from expansionary territory earlier this year to levels that signal contraction, it said. The challenges that the global economy is facing are immense, and weakening economic indicators point to further challenges ahead. In the US, the Fed Reserve Bank of New York's October survey of consumer expectations has jumped from 5.4 to 5.9%, while Fed Vice Chair Lael Brainard has signalled that interest rate hikes are likely to slow soon, saying, "I think it will probably be appropriate soon to move to a slower pace of increases, but I think what's really important to emphasise is we have additional work to do." This follows comments from Governor Christopher Waller in Sydney yesterday, who said slowing should not be seen as softening in the Fed's commitment to lower inflation. US Treasury yields are up slightly, the 10-year to 3.87%, the 2-year up 9 basis points to 4.41%. And the US dollar has strengthened against most major currencies. The Aussie dollar, having given up gains made after China moderated its zero COVID strategy yesterday, though there are now rising cases there, the Aussie currently at 67 US cents. Well, the local share market will be looking for direction this morning with ASX futures down slightly there. In the commodities complex, oil prices have fallen around 2.5% as the US dollar firmed, while surging COVID cases in China have investors worried about demand. Meanwhile, OPEC has cut its forecast for global oil demand growth to 2.6% for this year, while it's also lowering its forecast for next year. Iron ore futures rose more than 1% to $92 a tonne. Base metal prices, they were a little mixed there. Copper hitting 5-month highs before it retraced its gains. And gold futures were up almost 0.5%. And Bitcoin and other cryptocurrencies remain under pressure as the fallout from the collapse of crypto exchange FTX spreads, with rival exchanges seeking to reassure investors that their funds are secure. In corporate news, the Commonwealth Bank has released its first quarterly trading update. Unaudited cash net profit after tax lifted 2% to around $2.5 billion. Income increased 9%, driven by higher margins and volume growth. Expenses increasing 4.5% as staffing costs increased. And operating performance also lifted. And today we get the Reserve Bank's minutes from its last meeting. That is your day ahead. We'll see you again tomorrow.